This video is sponsored by Incogni. Visit the link in the description and use code BAGEL to get 60% off an annual subscription. Hey everyone, welcome to The Plain Bagel. I'm your host, Richard Coffin. We're back again with another episode of everyone's favorite series. Investment analyst watches obscure finance film and ruins it by over-explaining the scenes. Real crowd pleaser on this channel. Today we're going over a movie based on the book of the same name, Barbarians at the Gate, a 1993 film, so a bit of an older one, that's based on the 1988 leveraged buyout of RJR Nabisco, a company that you might not initially recognize by name, but whose products you've probably enjoyed before, namely their key invention of Oreo cookies, something they sold right alongside their other key product, cigarettes, because the 80s were a wild time. Now I can tell that you're all thrilled to hear about a movie you've never watched before, about a company you may have never heard of before. But I've actually been wanting to cover this movie for quite some time because one, the takeover of RJR Nabisco was a pretty notable event. Not only was there quite a bit of drama, at least relatively, in the finance world, but also it was the largest takeover in corporate history at that point. And the movie does a pretty good job of staying true to the events that transpired and even the characters that are involved. And two, the movie is chock full of finance jargon, references to other big companies and financial events that give us a lot to dig into and kind of dissect here. And that's exactly what I plan to do with this video. Today, we'll be covering the major plot points of the film, talking about the different terms and the like that come up, and just giving overall more context and background information about the things that transpire. And in case it's not clear, spoiler alert, we will be covering kind of the main storyline of the film, just for those of you who had this on their list of to-watch movies that they were surely going to get to. But without further ado, let's hop into it. The movie begins with an introduction to our main character, Ross Johnson, who from a very young age, a bit of a go-getter, a smooth salesman, who by 1988 has become the CEO of RJR Nabisco, with him attending a corporate event for the company with his wife. And it's in this scene that we get introduced to a bunch of the main characters of the movie. There's Charlie Hugo, the chairman of the board of directors, effectively Ross's boss in a way. The board of directors, they're meant to represent the shareholders of publicly listed companies, and while they don't get involved with the day-to-day operations, they can hire or fire executives, determine compensation, and decide ultimately whether to accept or reject takeover bids. That'll matter for later. There's also Ed Horgan, who works under Ross as the president of Tobacco, and Johnny Grenis, who works under Ross as the president of Nabisco, the cookie side of the business. With Johnny constantly pestering Ross about his excess with these events and his corporate spending.
Just this kind of spending is crazy, Ross.
Oh, John, the company's making so much money, we're shitting green.
Something that's a bit of a theme throughout the whole movie and pretty important to the plot, because Ross, for his part, really enjoys being flippant with company money, giving Rolexes away to clients, throwing big parties, and even enjoying a fleet of his own private jets. All of which is pretty accurate to the real Ross Johnson, who was known for greatly increasing his own executive pay while working at companies, and enjoying many company perks, with him sort of developing this image as the epitome of corporate greed. But at the event, Ross appears to be well liked, again, very personable with everyone there, and we see people celebrating this news story played on the TV around an individual, Anthony Cipollone, being awarded $400,000 in damages by cigarette companies.
A tip for Tony Cipollone.
Again, a real lawsuit where Anthony sued tobacco companies for his wife's death from lung cancer that at the time was seen as a victory for Big Tobacco, given that it really seemed to limit their liability in cases related to the dangers of cigarettes. But the next day, Ross is seemingly annoyed that the stock for the company, despite this positive update, hasn't really budged. That's not really moving higher. And at a company-sponsored golf tournament, one of his investors pitches him on the idea of carrying out a leveraged buyout to try and solve the stagnant stock price, with his friend Don suggesting that Ross meet up with Henry Kravis.
Because Henry's the best. He was the first to do a company buyout. He practically owns a patent on the process.
And again, all these people are real. Henry Kravis is actually one of the K's of private equity company KKR, a firm that today manages over $500 billion in assets under management. And the movie does have a few scenes trying to explain how a leveraged buyout works, including the golf tournament itself, Ross's introductory dinner with Henry Kravis where he gets pitched on the idea, and then later when Ross's wife explicitly asks him to explain leveraged buyouts.
All a buyout means is that management, the team that runs the company, they buy out all the shareholders, and the company goes from being public to being private.
But to quickly kind of summarize the high-level idea, to that point, a leveraged buyout is when a group of investors raise a bunch of money, most of which is debt, hence the name leveraged, use that to buy what's typically a publicly listed company, and then once they have private ownership of the business, doing everything they can to raise profits, raise cash, and overall squeeze more money out of the business to pay down that debt. It's a high risk, but also high reward strategy given how little money investors are putting forward of their own capital and the potential upside if the company is able to pay down the debt with its own money. And it's something that Henry Kravis did play a pretty important role in popularizing, although technically, he didn't carry out the first one. That was actually by a Lewis Coleman, who acquired Orkin Exterminating Company back in 1964 with just $1,000 of cash up front. A strategy that at the time was actually referred to as a bootstrap acquisition. As for why they called it that, I don't know. I think it has to do with the idea of pulling yourself up by your bootstraps or sort of making something out of nothing or very little. But I'm not really sure, so don't quote me on that. Anyway, we see this all explained as being an attractive offer for everyone involved. The investors will get a higher stock price for their shares. Henry Kravis will charge a 1% management fee, or basically get 1% of whatever the company ends up being sold for. And Ross will continue to be able to run the company as Henry Kravis promises, the way he sees fit, and likely get some sort of payoff for being involved with the deal. However, as recently talked about on the channel, leveraged buyouts carried out by private equity companies do have a bit of a bad reputation for being ruthless, with companies seeing their assets stripped and employees laid off, all for the sake of slashing costs and squeezing more profit out of the business. Something that we actually see alluded to in this scene.
That's French for firing people, isn't it, Henry?
As few as possible, of course.
Few dozen, 10,000?
As I said, as few as possible.
And on that sort of sketchy note, in the next scene, we get a glimpse of some of the corruption that's running rampant on Wall Street at the time, with a news story playing in the background about a junk bond trading specialist, Michael Milken, which, as a quick sort of fun fact, actually holds a record for being one of the highest paid employees ever, with him receiving compensation of over $500 million in 1987 alone. But in the scene, we hear about his firm Drexel Burnham Lambert being implicated with an Ivan Boesky, someone who's been charged with insider trading, which will matter later. And mind you, when we talk about junk bonds, we're talking about bonds issued to investors that are just high risk. And during the 80s, they were a popular method for raising the money needed, or specifically the debt needed, for leveraged buyouts. That kind of Easter egg aside, however, we see Ross ultimately sort of brush off the offer, mostly because he's concerned that he won't be able to spend as much company money if he has private equity investors sort of breathing down his neck, trying to control costs. And besides, he believes that the company is about to see its stock price skyrocket thanks to a new innovation that's bringing to the market. Premiers, a new smokeless cigarette that's supposedly healthier than typical cigarettes. Again, something the company did actually try to release to revolutionize the industry with this supposedly non-cancer causing product that would heat up the tobacco inside the cigarette rather than burning it. Which, as a fun fact here, and a bit of subtle foreshadowing, is often highlighted as one of the biggest product flops in US history, for reasons that we see in the next scene as Ross hears back from early test survey results on the product.
They all said they tasted like shit.
Like shit? Shit was the consensus, yes, sir.
So with Ross's key catalyst for the stock now completely underwater, and him even potentially facing a firing over this, we see him decide to proceed with a leveraged buyout, but not with KKR, but rather a friend of his, Jim Johnson, the chairman of American Express, and namely the company's investment bank arm, Shearson Lehman, which, yes, is in fact the same Lehman that would eventually go and kick off the 2008 financial crisis with its own failure. But that's decades from now. Going back to the 80s, we have a typical work montage, after which we have this meeting where the president of Shearson Lehman, Peter Cohen, is meeting with Ross to outline their leverage buyout deal for RJR Nabisco, with them highlighting that while the stock is currently trading at 53 1/8, they'll go ahead and offer $75 a share for the company, which is notably higher than any previous high the stock has ever reached. Now, we touched on this before, but as for why we're hearing the stock priced with a fraction, it's actually how stocks used to be quoted up until 2001, which is when we switched decimals. Before that point, the smallest price unit between stocks was actually 6.25 cents, or 1/16 of a dollar, which from what I've read on the matter is because America used to use Spanish coins as legal tender, which themselves were divisible into eighths, and this convention of dividing dollars into eighths and later sixteenths was just carried over into the New York Stock Exchange, when it was first founded, with us again only seeing all stocks on the exchange quoted in decimals by the end of 2001. And as for why Ross and his gang are offering a higher price than the current stock price that they could otherwise get on the open market, that's because they're trying to convince the board of directors to vote in favor of this acquisition, which would mean they wouldn't have to go to the open market and buy all the shares of the company, which can get complicated. Yes, there's currently a lower price that they could acquire at, but as they try and buy more and more of the shares, that's likely going to push the stock price higher and could end up being more expensive than this tender offer, which just involves the board of directors voting and deciding whether to move forward with it. And as the movie also highlights, a higher stock price will help fend off competition and other bids that might come for the company. And despite how much more they're paying for the company to acquire it, we see it alluded to that Ross is still going to make a massive payoff if this deal moves forward.
Are these figures for real?
Unfortunately for us, however, before he's able to quietly seal the deal, news of the arrangement gets out and starts making headlines, given that it, again, represents the largest takeover in corporate US history. And we quickly see the Barbarians at the gate as a bidding war ensues, and everyone tries to get a piece of the action. Henry Kravis himself, seemingly out of pride and anger that Ross took his idea and went ahead with someone else, makes his own tender offer for the company at $90 a share. A bunch of small retail investors start buying in, including some strangers who overhear the executives talking about their deal. And we really see all the chaos as Ross attends a seemingly square dance political fundraiser where everyone's soliciting him to try and get in on the deal.
Wally McNabb, I'm with Drexel Burnham.
With one of the notable individuals being Ted Forsman. Again, real person and key competitor to KKR, who tries to convince Ross that the company is basically evil and that he should really not work with them and should work with him instead. With him later being the one to allude to the title of the film.
The bastards are at the city gates. Let's stand at the bridge together. Let's stand at the bridge and push the barbarians back.
Right.
Which, to his passionate point, in addition to the cutthroat operations and the sketchy sort of junk bond dealings, private equity has been accused of being pretty detrimental to the areas that it operates within. Not just decreasing the quality of service in important areas like healthcare, but notably carrying out sizable layoffs and contributing to unemployment, especially within the retail sector. And even in the film, we see these sort of dark consequences mentioned with the previous KKR takeover of Safeway, the grocery chain.
18 years he drove a truck for them, Ross. 18 years. Parked the truck one last time, he went home, and he shot himself.
But for Ross, that's not really the deal breaker. While he does try to negotiate with Henry Kravis and KKR to try and see if they can work together at $90 a share to avoid any further price competition, things ultimately fall apart as one, Henry Kravis demands that they use Drexel Burnham Lambert to raise the funds for the deal rather than Shearson Lehman. And two, despite what they talked about in their initial discussions, they now expect Ross to rein in his spending and that he won't be able to really control his ship as he wants, which for Ross, obviously unacceptable, and the competition's back on. Now fast forwarding a little bit, we get another 80s montage of everyone working, I guess. A few things happen. We find out that KKR is working with an insider to price out their deal, none other than the president of Nabisco himself, Johnny Grennis, who I said would matter earlier. Come on, keep up. People also find out that premiers taste like crap. But the big twist that ultimately leads to Ross's downfall here is that his deal with Shearson Lehman to take over the business gets leaked to the press, with the world finding out that Ross stands to receive $2.5 billion if Shearson Lehman is successful in acquiring the business. With this representing the share of the company Ross would stand to acquire at essentially no cost to himself. A headline that ultimately costs Ross the deal. While Shearson Lehman does come out with the highest bid at the end of $112 a share, the board ultimately decides to go forward with KKR's final bid of $109 a share, or $25 billion for the entire company, because they're seemingly just peeved off by Ross's greed.
I'd say the deciding factor, the one thing that made the Kravis offer more attractive, was the fact that you were not part of it.
And so RJR Nabisco goes to KKR for a whopping $25 billion. Investors get a massive payoff, and our poor protagonist, Ross, flies home commercial. But don't worry, because in the closing scenes, as the film concludes, we find out that he would end up with a $53 million settlement as he went out the door. Or $23 million after tax. And that's the film, and the spectacle that was the RJR Nabisco leveraged buyout. All of which, again, stayed pretty true and accurate to the real-life events. And today, RJR and Nabisco do continue to exist, albeit now under different companies. As someone finally realized, that made more sense. And while I may not have heard of any of this, these events did play a pretty important role in drawing more public awareness and criticism to the greed of Wall Street and just the general unethical practices that happen in the space. Which, speaking of, let's take a moment to talk about data privacy, because you're probably well aware the internet is full of pretty bad actors trying to take advantage of your data. But what you might not know is that there are data brokers out there who actively collect, aggregate, and sell your personal details to others, including your name, SIN or social security number, address, online activity, contact information, location history, login credentials, date of birth, your employment history, financial information, health history, and the dumb product you bought on Instagram last week. As you can imagine, this can be problematic. Not only can it lead to annoying spam or robocalls, but we've seen instances of companies using this information to price discriminate based on your details and online activity, as well as explicit cybercrimes that are carried out in part thanks to the details purchased from these groups, which is where today's sponsor Incogni comes in to try and help take back your personal information. Incogni is a service that reaches out to data brokers on your behalf to request the removal of your information from their databases. They have an easy-to-use dashboard that shows the process of your data removal requests, which data brokers are legally ordered to follow. And because data brokers can simply recollect details after they've been deleted, Incogni sends out repeat requests to ensure that once your details are off these databases, they stay off. I've talked before about how it's really helped clear up my own personal inbox from all the spam I was receiving, but thinking the other day about it, I actually don't get robocalls anymore, which I had to take a moment to think about the last time the CRA called about a tax issue I had to resolve.
Canada Revenue Agency filed a lawsuit against your name.
So either Incogni helped with that, or they're about to come for me, so I'll keep you posted on that. Regardless, I found some benefit with the service, and if you'd like to try them out yourself, you can visit the link in the description below and use code BAGEL to get 60% off an annual plan subscription. So thank you, Incogni, and thank you guys for joining me today. I hope you enjoyed this video. If you did, please do make sure to like, subscribe, all that good stuff. It does help the channel tremendously. And let me know your thoughts on the movie RJR Nabisco, especially if you were around when all that played out. We'd love to hear your own kind of experience with the situation. But for me, it's just a movie I saw that I thought made a good candidate for diving into. Thanks again for joining me. See you in the next one.